Hello and welcome, What the Finances, to another episode of the What the Finance podcast, where we talk to experts to help gain a greater understanding about what is happening in the world of finance, investing, and markets. On today's podcast, I'm happy to welcome Peter Krauth. Peter is a former portfolio advisor and a 20-year veteran of the resource market with special expertise in precious metals, mining, and energy stocks. He's the editor of two newsletters to help investors profit from metal market opportunities, which are Silver Stock Investors and Gold Resource Investor. And he's also the author of the recently released book, The Great Silver Bull, Crush Inflation and Profit as the Dollar Dies, which I've actually got a copy here, which is quite good. And you can get that from any sort of online bookstore, anywhere in general. So Peter, thanks for joining the podcast.
It's my pleasure, Anthony. I appreciate that. I do want to point out, you mentioned any bookstore online, but actually it's exclusively available on Amazon. I just want to make sure that that's clear to all of your viewers.
Okay, no problem. It's probably the one-stop shop for most people, isn't it?
That's right. Exactly.
Maybe that's why, because I've only seen it there. But it's where I buy books. But yeah, Peter. So I guess what was the influence for you writing the book?
So a couple of things. I mean, I'm as you mentioned, I write a silver-focused investment newsletter that I launched in January of last year, and I've been investing, researching, and writing about silver and other commodities for as much as 2 decades now. But when I started writing was actually March of last year, and was in the I'm going to say a year into the pandemic, and looking around and thinking, there's not a whole lot to do. I am busy with the newsletter, but social time is very restricted. So it's if I'm going to do it, now is as good a time as any. And I felt like I'd been accumulating so much information and research on silver in particular, that I just sort of felt compelled to put everything into one place and explain the opportunity to readers of what I saw the opportunity was in silver, where things were headed. We have some comparisons to look at from the past. And I just felt that the opportunity was so big that I really wanted to bring this to a wider market and explain to people what the setup was and where things could potentially go.
Yeah, and I think sometimes it can be a bit daunting for people trying to get into silver, and you have to learn all these terms and learn all these different things. So is that really the goal, just to have a one-stop shop for people to really understand what silver is and maybe why people are investing in it?
That's exactly right. In fact, so what I've done is the book is broken down into 5 sections, and the first part is a history on silver. From there, I go on to what the macro situation is right now, sort of economically with inflation, and I look a little bit at more sort of recent history as well to understand the current setup. And from there, I talk about the supply and demand profile of silver, what makes it tick, and why it's quite different, in fact, from most metals in terms of how it's mined and the applications for silver, industrially and investment-wise, and so on. And then from there, I talk about what makes silver investment tick, what's particular about investing in the silver markets, how you'd go about it, and then ultimately how to build your own portfolio, and eventually how to sell once we reach some sort of a peak in the silver market.
Yeah, it's super interesting. So you mentioned, I mentioned that you've been in the industry for 20 years. So I guess, why silver? What attracted you to silver to start with, and I guess what's solidified your belief in it?
Sure. So again, I have certainly been investing and writing about silver for a long time, but when it came to on the one hand, sort of launching the newsletter in January of last year, what triggered it was when I saw the reaction in sort of mid 2020, within the next sort of 4 to 5 months after the pandemic hit. Between May and August or so of 2020, silver was up 150%. It had taken a hit from about $15 or $16 down to $12, and then peaked just under $30, all within a span of about 6 months. And gold during that same period had done quite well, had been up about 40%. So that's almost a 4-to-1 outperformance of silver versus gold. And for me, having followed this for such a long time, I felt like this is an indication that we're heading into sort of the acceleration phase of silver within a secular bull market for precious metals. And then it was likely to start and continue outperforming gold on a longer term basis, which is what we've seen historically. In bull markets for precious metals, silver tends to outperform gold. So seeing this kind of reaction and seeing silver hold up as well said to me that, as I said, we're in this acceleration phase for silver, and the opportunity is tremendous in silver, given that it's both an industrial and a monetary metal, and so and it was very much undervalued, still is, in my opinion, today, making it for a great bargain in terms of the metal as well as the stocks. And so that's kind of what triggered. We looked around, said, given other options in terms of addressing an investment sector, silver had the best profile, had the best setup. And so that's why we focused on a newsletter on silver. And then, as I said before, within a few months said, I've really got all this information that I've started to build up on silver. Why not put it into one place? So the book allows you to understand the situation and where we're headed. And then the newsletter actually allows people to follow that on more of a real-time basis.
Yeah, and it's one thing that really stuck out to me in the book was you mentioning comparing it to, I guess, past silver and gold bull runs. So I think you mentioned in the 70s and early 2000s, how there's sort of like a first peak and then the trough and then like a massive peak after that. And I think you were saying that you think we've experienced the first peak and we could see the second peak coming, obviously who knows how long, but in the future. Is that correct?
Yes, absolutely. You've got that right. So, if we look back, for example, to the 70s, silver had a great run from about 71 to 74, followed gold essentially in terms of its run up and then correction and then a second run up. So from about mid 74 or late 74 to early 76, gold and silver both corrected. Gold was actually down by about 50%. Silver didn't correct that much. But both ran up from early to mid 76 up until January of 1980. And in that decade, gold was up about 1,400%, while silver was up 3,700%. So it really provided tremendous gains in that decade, and more than doubled gold's returns. So I think that we're in a similar kind of setup now, a setup in terms of a secular bull market that started back in 2000, 2001. I believe that the first peak hit for silver, at least, hit in April of 2011, when silver reached about $49 and then corrected and then bottomed in sort of late 2015 and had started to trend sideways and then has been certainly rising pretty steadily ever since then. And so, based on several indicators and measures, I believe we're in a very long-term bull market for precious metals. I believe that, that first peak of 2011, actually for both gold and silver, was sort of the midpoint. And then the more recent bottom in late 2015, sort of was the trough where we've seen things to start to pick up and both metals start to trend higher again. So, these things are hard to time for sure, but if I had to say, I could easily see sort of another 5 to maybe 10 years of tremendous upside in both metals, and for sure in the explorers and in the producers as well.
Yeah, it's really interesting. So I guess a lot of people, you mentioned the book that gold is quite a large investment. Majority of the gold market is for investments, but silver is a lot smaller. So I guess people might be thinking, why wouldn't I just invest in gold rather than silver? So can you maybe talk about the differences between the markets, the commodity, and I guess what the advantages of either or may be?
Sure. So that's a good point. I mean, the gold market is about 10 times the size of the silver market. And I'm a big gold fan as well. So I certainly wouldn't discount investing in gold. I would recommend that as well. There's a lot to be said for that. And I think that, gold will do tremendously well in the next several years. The difference is only that silver is a smaller market and it is more volatile. So for many people, it wouldn't. Some people will say, well, if it's more volatile, should I stay away from it? Because volatility is an indication of risk. There's no question about that. But there are lots of ways, which I do talk about in the book, in terms of how people can mitigate risk. One example is just by having smaller allocations to silver investments, whether that be explorers all the way to larger producers. The larger producers, naturally, like for gold, are going to be lower risk. And people can take profits when they see an outperformance or a strong performance in some of their silver holdings. The thing with silver is that, if we look and compare with the 70s, the returns were so strong. Silver, just the metal, having more than doubled the performance of gold over that decade, for me, bodes well for the future of this precious metals bull market. I think gold will do very well. I would expect silver to probably do at least twice as well this time around, just as much as it did in the 1970s. A lot of people will look back on this current bull market. If you'd ask just about anyone and say ask them where has the best place been to be invested since, let's say, 2000 or 2001, and I think almost invariably you'll get the answer stocks. But that's wrong. And so I have a chart actually in the book that compares the Dow Jones, the S&P index, which are the broad indices of stocks in the US, silver and gold, all in the same chart. And stocks have done relatively well. They've been up with the bulls and bear markets that they've had, the corrections and the run-ups. Up until sort of early this year, they were up about 200 or 220%. And if my memory is correct, silver was up about close to 400%, and gold was up over 500%. And this is all since the early 2000s. So both silver and gold have considerably already in the last 20 years outperformed stocks. And we saw that in the 70s. Stocks were actually completely flat in the 1970s. So from 1971 to 1980, the Dow Jones and the S&P had returned zero over about 15 years, in fact, 1966 to 1980, roughly. Whereas, as I said earlier, gold was up 1,400%, and silver was up 3,700%. And like I say, I expect this kind of dramatic outperformance this time around as well. And you just get a lot more potential upside for your money in silver versus gold. And if you like, we can talk a little bit about the differences between gold and silver, the kinds of applications and so on, and what that does in terms of silver and silver investments.
Yeah, if you want to expand on that, because I know in the book you mentioned how I think gold, 90% of it is used for investment, whereas with silver, I think it's about 40%. The rest is to do with electronics, renewable energy, a lot of those things. I'm not sure if you can expand on that and how
absolutely
it's used for it. Yeah.
Yeah, absolutely. So that's right. Most of gold investment is most of gold, I guess, purchasing is for investment. Only 8 to 10% goes to industrial applications, but for silver, it's almost half. So about 54% goes to industrial applications. The largest single application, in fact, for all silver is for solar. And so solar panels consume 11% of all of the silver that's available every year, of all of the silver supply. And it's interesting to look at solar in particular, it being, a green energy and using the sun, obviously, and so a renewable source. Solar electricity from solar panels is forecast to grow by the International Energy Agency by 2030 from current levels by about 8.5 times, which is a huge amount in just 8 years. And if silver already consumes 11% of all the annual silver supply, it'll be consuming over 90%, or it would consume over 90% within 8 years. So that's essentially the forecast. I think that's too aggressive. I don't think silver, or that solar panels will necessarily grow that much. If they do, they'll be putting tremendous pressure on silver prices to rise because the demand will be so strong, which is encouraging, and one of the reasons that you'd want to invest in silver. And then you have all sorts of other applications, like electric vehicles and vehicles in general. Even current technologies consume a lot of silver. You have medical applications because silver is a biocide, so it kills bacteria, and the bacteria do not get used to or adjust for or mutate for silver, for the action of silver against them. And so silver is a great addition to things like water filtration, again, as it kills bacteria and so on. It's used in municipal water. You find it in medical equipment, again, for its antibacterial functions. So it has lots of applications. Applications are developed almost on a daily basis for silver. And the other half is of silver consumption is mostly some form of investment. So you've got silver ETFs, which are like buying a stock that holds silver, a stock that's backed by physical silver. Then you have physical silver investment, so people buying silver coins, silver bars, silver jewelry. And then you have a couple of other smaller segments, things like photography. However, that's actual film where silver is used. That's been declining for a good 10 to 15 years. There's been a bit of a revival as people kind of go back to sort of the old school photography. And it's also used in X-rays. So that's sort of a mix between medical and photography. So that is a declining use of silver, but it's been dramatically being replaced in terms of consumption from the solar industry. So it's what's considered partly a monetary metal and part an industrial metal. And so for me, at least, when I look out in terms of what's happening in the economy, and there's always going to be a balance, risk, reward. And if there's a concern that the economy slows down, we're hearing a lot about potential recession, for example. If the economy slows down, people become concerned. You have the monetary side of silver, as people buy that as an inflation hedge and as an uncertainty hedge that will support the silver price. And if the economy is strong or recovers quickly, then you have the whole industrial demand side of silver, and that will also help support the silver price. So when I look at that, I think that things will remain relatively balanced. The cost of producing silver right now, if you include all of the costs, you're looking at somewhere around $18 or so per ounce, and yet silver selling for about $21 per ounce. So there are not very wide margins, which means that the downside risk for the silver price is very slim, very low risk for it to drop much from current levels. And yet the upside as a chaos hedge and as an inflation hedge, I think, are probably underestimated. And so I think that silver has some serious potential upside where it could run up as people look for it to hedge against inflation or uncertainty.
Yeah, I think, one thing you mentioned there is there's really going to be a struggle between demand and supply if this demand continues to increase. And I think in the book, you mentioned how only 25% of the supply is actually miners focusing on silver. The rest is actually byproducts from other mining. So that would be a further concern, how to actually, increase the supply of silver in the market.
That's a great point. In fact, that's key. I like that you honed in on that, because it's very particular to silver in terms of the supply. As you said, only 25% of mined silver actually comes from what we call primary silver mines. 75% of mined silver actually comes from mines that produce other metals and still produce silver, but as a byproduct. So that means mining of gold, of copper, of zinc, and lead. Those are the main four other metals that are mined that also happen to mine some silver. So here's an interesting, quandary, is that if, miners are conservative by nature, and they don't determine the price of their product. The market determines the price of silver, for example. So they accept that price. What they can control is their costs, and they need to try and keep their costs as low as possible to have the widest margin possible. So that's, pretty intuitive and straightforward. However, with so much silver being mined as a byproduct, a lot of those miners that mine gold or copper and happen to also mine silver, it's for them almost a bit of an afterthought. So if they see the silver price go up, they're happy to accept a higher price for their silver, but even if they could, it's not easy to crank up a mine, for example, for all sorts of reasons. There are delays and having to find more source and permitting and financing, etc. It's very capital intensive. But so if the silver price goes up and they see it rise and stay up for a while, they'll most likely just accept this higher price for the silver and lock in more profit on the silver that they sell. And even if we look at, let's say, a primary silver miner, so whose main output is actually silver, if they see the silver price go up, often they'll want to see the price rise and stay up for a considerable amount of time, maybe a year or even 2 years. And during that time, what they'll often do, or at least some will say, okay, well, the silver price is now higher. I can actually mine an area of my deposit that's a lower grade of silver. So they actually process the same amount of rock, extract less silver because they're, as I say, processing a lower grade ore. So it has a lower silver content, perhaps in a certain portion of the deposit. They'll be producing from that area because silver prices are higher. They can actually conserve the same levels of profit because they're receiving a higher price for their silver and produce less silver. So it's almost a backwards economics lesson where despite the price going up, you've actually got the output going down. Not what you'd normally see, in a normal demand supply scenario, and yet that can easily happen in something like silver. So as I say, a higher silver price could potentially, at least for a while, lead to lower supply, which exacerbates the situation and helps to encourage even higher silver prices. So it's a kind of thing that feeds on itself, and it's a feedback loop, in fact.
Yeah, and it seems like silver is prone to those, when that occurs, just massive moves. I think, in the 70s and 2011 as well, it was very, very fast and very quick move.
Exactly. Those things can play out over months, and it's very much, I guess, subject to what we call FOMO, or fear of missing out. It's something that applies to gold as well. In most things, people, if they see a price go down, they'll want to buy more. And it seems like if gold and silver go down, they think something's wrong with it. They shy away from it. They don't quite understand what's happening. But when their prices go up, people tend to want more of it. They pile into it. And that, as you say, it just sort of exacerbates things, and their prices run up even faster. People become afraid of missing out. Really, that is what happens. And one of the things that I do talk about in the book, which is particular to silver, is because gold does tend to run first. So if there is, an element of uncertainty and chaos, worries about inflation and so on in the market, people will turn to gold first. But per ounce, of course, gold is a lot more expensive. Today, it's around $1,850 an ounce. Silver is around $21 an ounce. So if people are turning to gold and we're in a bit of a frenzy and gold prices run up dramatically, let's say they go to 2,000, 2,500, people will certainly start paying attention, look at gold and say to themselves, well, is it too late for me? Has this run up too much? At that point, silver could be $40 or $50. And they'll be looking at silver as an alternative to saying, well, I can get a lot more for my money if I buy silver. It's a lot cheaper. And so it tends to be a natural alternative to gold when people are looking to get into the precious metal space. And there's been a bit of a run up already. And so silver benefits from that. There's no question. It runs up somewhat later than gold, but history has told us it tends to outperform gold.
Yeah, that's super interesting. So I guess if we look at, we talked about supply before. So can we actually measure the supply that should be online in the future? And I know sometimes in other commodities, you can actually see, what mines are being scheduled for the future. Yeah.
Sure. So yes, I mean, if you look at the forecasts, at least, because that's what we're
Yeah.
doing, is we're projecting outwards, and you've got all sorts of investment banks that do this kind of research. There is an expectation of a little bit more supply over at least the next few years, a small increase, probably on the order of about 4 or 5% mining output over the next few years. But the peak that's forecast is probably by about 2025, 2026. And that peak may only be as high as the previous high, which was around 2016. And so you've got this effect of a peak in 2016, a drop off in 2020. Many mines were shut down, at least temporarily, because of COVID restrictions. And now that we're somewhat coming out of it, you've got this increase in supply. And as I say, it's expected to somewhat peak probably in the next few years. But if you look at projects that are forecast to come online, it's like you say, those are very limited, expected to be quite restricted in terms of the quantities and the number of mines that are expected to come online. And even with the growth that we see over the next few years, the Silver Institute, for example, does some great research in this area, forecasts that we will have we had a deficit last year in terms of supply versus demand overall in the silver market. They're forecasting another deficit this year that's going to be larger than last year's, and they're actually forecasting several more years of deficit in the silver market. And so it looks like silver will simply not be able to keep up with demand over the next several years. That we're going to be, in a deficit scenario going forward.
Yeah, it sounds similar to many other commodities around the
Exactly.
world that's occurring. So, you've mentioned so many indicators that you're currently watching to see, I guess, the movements and what happens there and the impact that has on silver. Are there any others that you think are important to analyze, if we might see a silver run in the next few months or something? I'm not sure if there's anything you
Sure.
watch.
So these are more sort of long-term indicators, but one important one, I guess, that people are maybe potentially more aware of is the gold to silver ratio. And so what it does, it's very simple, is it just takes the the gold price, and divides it by the silver price at any given point in time. So if you were to do that today, you'd probably get somewhere around 85. So that means that if you divide the gold price by silver price today, it means it would take you about 85 ounces of silver to buy 1 ounce of gold. And that's historically high. If you look back over the past, say, 20 or 30 years, it's averaged closer to about 55 or 60, meaning it normally on average takes about 55 or 60 ounces of silver to buy a gold ounce. So when the ratio is high like this, at some level above 80, it tends to peak close to or above 80 and then starts to pull back. And when it pulls back, usually what's happening is that silver prices are rising. Gold prices can also be rising, but silver is rising faster. So when you have that scenario, silver is catching up and surpassing gold's gains as the ratio falls. And so you're in a renewed rally for precious metals. Gold is rising, silver's rising faster, the ratio falls, and so silver is outperforming gold. So that's an important one to look at. As I say, we're above 80 right now. I would not be surprised to start seeing that in the next few months coming down. As you see that ratio cross through 80 and go below 80, and if you see it continue to fall down to sort of the mid and to low 70s, odds are pretty strong that we're in a new rally phase for both metals, in fact, gold and silver. And something else that I look at is the Dow to silver ratio. So the Dow to silver ratio, if we look back in the 1970s, again, this is in the book, there's a chart that shows how that played out. And in from the early part, sort of mid 71 to about 74, you had the silver to Dow ratio fall. So that meant that if you take the price of silver, the level of the Dow, and divided by the price of silver, that tells you how many silver ounces, again, it takes you to buy an equivalent of the Dow index. So as the ratio falls, it means the Dow is getting less expensive versus silver. Silver is gaining on the Dow, takes you less silver to buy the index. So there were two waves. In the first part of the 70s, there was one wave where it went down. So silver was gaining on the Dow, and then it corrected for about a year or so, rose slightly, and then had a second wave down. And so that's the kind of thing that you'd want to look for now. We had that kind of low in the last few years. It's risen again in the most recent years. And I think that we're going to reach a new peak again soon, and it's going to roll over, and that same Dow to silver ratio will fall off again, and we'll see silver start to dramatically outperform as stocks tend to either drift or actually correct if we go through a broader market correction. So these are the kinds of things that you'd want to look for to give you some indication of how silver is performing, and where we are potentially in a longer term silver bull market.
Yeah, I think those are great things to watch. So, let's say that someone's listened to our video, they've read your book, and they're like, okay, I'm sold. I'm into silver. How do I get into it? So I know you said the last chapter is actually how to invest in silver. So I'm not sure if you can talk more about that, and maybe some tactics or methods people could do to invest in it.
Absolutely. So, in the book, and as well as in my newsletter, I cover everything from physical silver to junior explorers, which are the opposite ends of the spectrum in terms of risk. So physical silver is going to be your lowest risk option to invest in silver. That means buying things like coins that are produced by a national mint. Could be the Royal Mint, could be the US Mint, could be the Australian Perth Mint. So that's physical silver. And then from there, if we go through the different levels of risk, you've got things that are like silver ETFs. There are two kinds of silver ETFs. One will essentially track the price of silver. It's a way to buy a proxy on silver. You're not actually owning any physical silver, so I would not equate it to physical silver. I'm a proponent of owning at least a little bit of physical silver, but silver ETFs, as I say, they're a way to play the price or the movements in silver. It's a one-click way to buy a stock and have exposure to silver. The ETFs are backed, or supposed to be, at least in most cases, backed by physical silver. From there, you've got another kind of silver ETF, which is a one-click way to own a basket of silver stocks. And there are two. There are two mainly. One is the SIL ETF, and that owns a larger size silver companies. And then there's the Silver Junior ETF, which is actually a bit of a misnomer. It's more like mid-sized to larger silver companies. Again, these two are lower risk ways because you're buying a single stock, so to speak, and that's diversified across a number of silver companies. From there, you've got individual silver miners or royalty companies. So the royalty and streaming companies are the lowest risk in that category. You've got companies which do not actually mine silver, but they invest in silver miners or silver projects. So they will lend money to them, and they're paid back over sometimes decades, either in kind, in silver, or in terms of profits for every ounce of silver that the miner produces. So that's a very attractive way to invest in the space. Then you've got large silver producers, which is self-evident, companies that produce silver and often some other metals. You've got growing silver companies that either will produce some silver but have a larger portion of the company's focus on developing new projects in silver. Then you've got essentially the juniors, and the juniors most of the time either have a project that or a deposit that they've discovered, a silver project, or they're actually just exploring, have not discovered any silver, but have done plenty of research. They may be looking in an area where there has been some previously, and they're looking for an economic deposit. Those will be the highest risk ones. So yeah, there are these multiple ways to invest in the space. The way that I would build a portfolio, and I do go into into detail on this in the book, is I would decide an amount, a total amount that you'd allocate to the silver space, and from there, say 10% could go to physical silver, and then of the balance, so that I would do something like 40, as much as 40% could go to the silver stock ETFs and the larger producers, so the royalty companies and the larger producers. And then from there, 20% I would allocate at most to the growing silver producers and developing companies. And then finally, another 20% could go to the junior explorers. And in each case, you'd want to have a small basket of names within that category, that subcategory, again, just to spread your risk. And not go over, say, 4 or 5% of your overall portfolio in a single stock. When you have the silver ETFs, you can go a little bit higher because they're already diversified within themselves. And from there are multiple ways that you can manage risk. As I was saying earlier, you can have smaller allocations to these types of companies and stocks if you want to keep your risk a little bit lower, especially with the junior companies. You can, for example, take profits if you've had a company, if you've been lucky enough to have let's say you've bought an explorer, and they've hit multiple times when they've drilled for silver, and they've had some really good results. The stock price could have doubled in the space of, say, 6 months or 12 months. I would suggest selling half. And if it's doubled, you keep the other half invested. You take your profits in cash, and you can either sit on that cash or reinvest that in another investment in that same space, something that you've been following for a while. One of the ways I like to mitigate risk is to both buy and sell in what I call tranches. So let's say you are interested in a silver company. You might say, I've got $500 or I've got $1,000 that I want to allocate to this company. My approach would be to not necessarily take the whole amount and buy it all right away in one shot. I would perhaps allocate a third and watch what happens to the price over the next several weeks or month or so. If the price comes down and the story hasn't changed significantly, perhaps it's just the time of year. There are all sorts of things that affect silver and silver stocks. There's seasonality, and these are all things I get into in the book. But if, let's say, you see the silver, the price of this stock go down, again, the story hasn't changed significantly, you might say, okay, I'm going to allocate another third to the stock, and you'll average down a little bit in terms of the price that you've paid. And then you watch it again for another several weeks and potentially make your last allocation. If you see things either stabilize or maybe even start to trend up a little bit, you'd say, okay, now's maybe a good time to place my my last allocation to that company. And when you see things run up significantly, you may want to take profits the same way. You may want to sell in tranches, in portions. You could sell off half at one time or a third at one time, and do that over a span of weeks or maybe even a month or two. And again, mitigate your risk. You just don't know how things will play out, but over time, in terms of experience, I can tell you that has tended to do well for me.
Yeah, because I think we saw like a bit of a run up in 2021, and then there's been a bit of a drop this year as well, I guess, along with the rest of the stock market. So that sort of shows you the importance of sometimes, taking that profit if it has gone up.
Exactly. And when you tend to see, especially in the space of perhaps a few weeks or a month, sometimes you'll get a considerable run. More than likely, that something is going to at least go through a temporary correction. So you may or may not want to necessarily take profits, but more often than not, it makes sense. Even if it's just partial profits, you can lock some of that away and perhaps either buy back in a little bit, shortly after if you do get a pullback, or just keep those profits and look to place them in something else, another opportunity that looks attractive.
Yes, that's great. So Peter, thank you so much for your time. You've covered so much stuff and really show people how they can invest in silver if they want to. So I guess my last question, what is one message you'd like people to take away from our interview and the book as well?
So I would have to say to consider silver very seriously. I really think that it should be in everyone's portfolio. And I'm not advocating necessarily taking any kinds of outsized risks. If you know a little bit about silver, you'll know that historically it's been part of our money going back a few thousand years. It's only in the last 50 or 60 years that silver's been completely removed from our coinage. And there are multiple reasons why, silver was part of money. In fact, silver is considered is the name for money in about 14 different languages. So people have an affinity to it. It has helped over centuries and thousands of years. It's helped protect buying power. I think that silver will reassert itself over the next several years in terms of protecting against inflation. That's one of its biggest roles. And so I think a huge opportunity is setting up. Again, I think that we're in the best comparison is to what we've seen and we saw happen in the 1970s. I think we have it's not exactly the same, it never is, but we have a very similar setup, and silver did extremely well in that decade. And so I think this is a sector that people really need to look at, to consider. Again, what I've done is put my whole sort of synthesis of the entire opportunity together in one book, so you can really understand the huge opportunity that silver offers, how to go about investing in it. And I do want to point out, as I said earlier, that you don't need to take outsized risks. You can buy a little bit of physical silver. You can stay strictly with silver ETFs or some of the larger producers and royalty companies, and they've done extremely well. There have been periods in the early 2000s where some of these large silver producers have returned 10 to 15 times in the span of a few years. So they can do extremely well. And yeah, I think really everyone needs at least some exposure to the silver space in some form. Hopefully the book helps explain how and why you'd want to go about doing that.
Yeah, it definitely does. It's opened my eyes to silver, and definitely think I'll add it to my portfolio in the near future. But Peter, thank you so much. So we've mentioned that your book is available exclusively on Amazon, so I'll put that down in the description below. We've also mentioned your newsletters, and if anyone else wanted to keep up with your work, where else could they do that?
Sure. So you can follow me at silverstockinvestor.com. That website explains about the newsletter. I also write another newsletter that focuses on larger cap gold companies and producers. That's something to consider as well. And I'm on Twitter and on LinkedIn. You can follow me there. Twitter, it's Peter_Krauth. And on LinkedIn, you'll find me as well. And so, I hope to bring more people into the silver space, and hopefully they'll recognize the huge opportunity that really lies ahead in this investment sector.
Yeah, I think they will. So Peter, thanks again for your time.
My pleasure, Anthony. I look forward to doing this again soon.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.